Hey guys, market update for you today, covering yesterday, Monday, the 6th of December. We're going to look at the market open for the week, touch on crypto as well as the Omicron variant, and then finally have a quick look at Tesla and Alibaba. So, as you probably saw, US markets did well yesterday, rising just over 1% after losing about that much the week before. The broader S&P 500 did a little bit better than the Nasdaq, as growth companies are still looking a little bit volatile, with interest rate rises looking more and more likely. But the VIX dropped and the markets as a whole rose, as I just said, and we saw similar recoveries in other markets around the world, like in Europe and the UK. Why did this happen? Well, Omicron fears are reducing. Some very early data has come out suggesting that despite cases rising very quickly in South Africa, Namibia and Botswana and places like that, hospitalizations aren't rising that quickly, so maybe the variant is less severe as many of us predicted in the past. In terms of crypto, the markets themselves and crypto-tied companies like Coinbase, well, they regained some of their losses as well, but still remain well below their all-time highs. Oil rose above 5% as well because, again, it fell on the possibility of reduced demand in the wake of an Omicron variant pandemic again, which is now looking less likely. This is exactly what we thought would happen. The Omicron isn't actually a real threat, and the markets seem to have woken up to this reality. Crypto has moved in the same direction as the markets, both when rising and when falling, showing that it is still a risk-on asset. It isn't non-market correlated, yet at least. But the overarching idea here is that, yes, as we were saying last week, Omicron isn't as much of a threat as people thought it was that Friday. It's very unlikely it's going to cause us to return to the lockdowns and the pandemic of 2020, and we're probably past that, and the markets are rejoicing on that news. In fact, another thing that I was talking about last week is the idea that the Fed or government and their actions are far more perilous towards the markets than Omicron was, and Morgan Stanley came out and said that exact same thing. They literally said that the Fed is a greater threat than the Omicron variant towards markets, which will surprise literally no one on this channel. The bank came out and said that early data from Omicron is actually positive and it could actually cause more immunity and less hospitalizations, which would be brilliant for markets, of course. The Fed's plans to taper, however, will hurt stock markets, as we've seen in the past with the taper tantrum in the 2010s. And of course, this is surprising no one. Valuations will obviously come down across the market, but particularly for expensive tech stocks, high growth stocks, hype stocks, meme stocks, whatever you want to call them. The Pelotons, the Zillows, the DocuSigns, the Zoos, the high growth, high promise, high risk and high reward stocks. The stocks that did very well in 2020, but have done much worse in 2021. Of course, when the Fed raises interest rates as well, that effect will only get stronger, again targeting high growth companies which need lots of cash and lots of capital to reach those high growth targets. Higher interest rates means more expensive debt and more expensive capital raising, which means they can't take out the money they need to achieve these growth targets, which means they don't achieve these growth targets and their valuations will slide. Morgan Stanley also came out and warned of the tight labour market. Now what they mean by that is that there are too many job openings, there aren't enough people, and this could cause inflation. Recently, people have been talking about a wage price spiral where higher wages cause prices to rise, which cause wages to rise, and they spiral onto each other and cause really high inflation. And while we haven't seen it yet, it is possible that we see it in the near future, and Morgan Stanley are warning of that as well. In short, this would be a very scary thing to see. It would be awful for inflation. It would literally skyrocket. It would cause tapering to happen faster, as the Fed would have to respond, and they'd also have to raise interest rates faster and higher as well, which again would hurt the stock markets even more. Now, for regular viewers of the channel, this news that Morgan Stanley have come out and said is not surprising at all. We've been talking about this for months, but it is good to see some institutions finally getting the hang of it and not ignoring the data that sits in front of our eyes. Now, I'm going to apologize preemptively to any Tesla shareholders, but this is news. It's not FUD, it's not fear, uncertainty and doubt, so I'm going to have to talk about it. Now, the stock is down almost 20% from its all-time high on some bad news, and the general market shifts away from growth and towards value that we've seen this year. So what is the bad news? Well, the SEC has opened an investigation against Tesla surrounding solar panel defects. There are also some early reportings of some dodgy actions regarding Tesla's autopilot system, their promises, their claims, and this is already under investigation by the NHTSA. I have seen some claims that Tesla doctored footage of full self-driving tests from a few years ago, and they edited out footage of a crash that happened in the middle of the recording, but really this isn't clear if this is true or false yet. We're just going to have to wait and see what comes out in the future. Unfortunately, nothing here is concrete. All we know is that there are two investigations taking place, one from the SEC and one from the NHTSA, and they are both targeting Tesla, but it's going to take months, if not years, to find out what's really going on. If Tesla have really done anything wrong, if they're going to be punished, or if this is just a witch hunt, who knows? We don't. We just have to wait and see. Unfortunately, this being YouTube, you're going to see a lot of people who hate or love Tesla or Elon, and they will categorically say it's one side or the other. Either Tesla and Elon are evil and they're stealing money, or they're God sent to the earth and we should be honoring his every move. But the truth is, we just don't know yet what is going to come of this, and we have to wait and see. In my mind, at this point, this could be neutral news for Tesla, but it's definitely not good news and it could turn out bad. So if I were a Tesla shareholder, I'd be a little unhappy at this. But to be perfectly honest, their stock price is still sitting at around about $1,000. It's still a really, really high value. I don't think many Tesla shareholders, or at least people who've been shareholders for a year or so, are going to care about this. Maybe if you bought at $1,200, you're a little upset, and that would be fair enough. Now moving over to China, and we see that Alibaba had good news for a change. Basically, the share price rose a little bit after an awful year so far. Now, it's important to note that even after this little rise, it's still down at 47% year to date, so it's still not that good, to be honest. What was the news that caused this short rise? Well, a new CFO was appointed. I can't remember her name, sorry, I haven't got it in my notes, but there's been a little bit of a reshuffle of executives at Alibaba, and it could be just what the CCP wanted. They could have wanted to place people who are favourable towards the Communist Party, who will work with the Communist Party and not fight against them. And having these new executives sitting on the board at Alibaba could help prevent future attacks from the CCP on Alibaba. Personally, I'm doubtful that this is actually good news. The CCP is still the same beast it's always been. Investor capital is still at risk with Alibaba, as with all Chinese companies, and I'm still not going to touch Chinese investments with a 10-foot pole. Now, speaking of touching China, Ray Dalio is in the news again. Basically, if you missed my last videos, a few days ago, he said that he doesn't bother paying attention to human rights abuses by the CCP, and that the Communist Party is just behaving as a strict parent, punishing a disobedient child. Now, he understandably got a lot of backlash from this, and even Bridgewater Associates CEO, Ray Dalio's hedge fund CEO, spoke out and said that he disagrees with Dalio. A lot of other people spoke out as well, like Mitt Romney, saying that Dalio has no principles. A lot of people made ironic jokes surrounding the name of his book, which is called Principles, and Dalio's apparent lack thereof. And unsurprisingly, Dalio has tucked his tail between his legs and said he was misunderstood. He claims that he doesn't ignore human rights abuses in China, that he's actually a good guy, yada yada yada. We've heard it all before. Dalio's a money-hungry coward. He doesn't have the gall to stand by his statements, whether they are pro or anti-China. He makes too much money from China to have any moral backing, and I have no respect for him anymore at all. Now, to any CCP shills or genocide deniers who find themselves watching this video, make sure to leave your dislike and your futile comment down below. I will not entertain your cowardice on my channel. The truth is, yes, you leaving the channel will mean I get less ad revenue, I will get paid less, but guess what? I've said it before and I'll say it again, there's more to life than money. Integrity and morality come first, and that's never going to change. I'm afraid that's it for today, guys. I'm enjoying making these videos. I hope you're enjoying watching them. I should have another video coming out later today, a long form scripted one that I'm sure you'll love. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. There's also a link down below in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to touch Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.